and a large proportion of our products and technology team is actually based in Edinburgh. And we use that infrastructure then to access payment schemes, which you see some examples there on the right-hand corner of the slide, that we aggregate and then provide out to our clients, primarily for APIs. So we've built our services for scale and to enable businesses to really access payments in a way that makes more sense for their business operations, rather than perhaps how banks would have traditionally approached providing services by segmenting customers into small, medium and large enterprises and providing different flavors of services to them in that context. We decided to scrap that and approach it very much from a perspective of what our customers need. And a lot of them wanted tech payment services, as it turns out. So over the years, we've been scaling quite rapidly. So we've been in business for about 4 years now, and we've grown the team from a founding group of 5 individuals through to just over 180 people now across London, Edinburgh and Dublin. And what I wanted to do today is just share some thoughts with you guys in terms of how we went about that. So to share maybe a couple of quick observations, and I'll talk about it in the sequence of years, which is probably the easiest marker for me to use in terms of the developing and growing the business. So starting maybe with year 1, it was, reflecting on it, it was a very fun year, a year of flip-flops and t-shirts and loads of post-it notes. I think we've created more business model canvases in the first 3 months of building the business than I ever did prior to that, and subsequently. It was a great tool for us in the early stages of the business to help us identify some of the needs and value propositions that existed there. And what was most important in that first year for us, it was very much finding that first client and getting them onboarded onto our platform and services. We were fairly lucky that our investors are very active in similar markets, and we partnered with a lending business called Libris to be our first customer, which eased the transition of someone trusting a brand new startup with what is intrinsically a very important part of the business, which is payments and moving money. So they've been a great early collaborator and help us shape our propositions in the early stages of the business. So that first year was very much focused on that activity, and once we've got that first customer, you end up having a lot of firsts as a business and as a product team. So the first transaction, the first user logging into the platform, the first payments that you receive, which are always very exciting. And but once that excitement dies down, you really start focusing. Okay, so when's the next 10 customers going to come from, and how do you start scaling? Which was really the kind of the formative for our second year is now we need to really start growing. So we had a few clients starting to use us to automate inbound and outbound payment transactions and starting to scale their payments operations for us. But what we really needed to focus in is finding that initial market where we could really prove our product market fit. And for us, it was the lending market. So we've identified that a number of lending businesses are very much interested in getting funds to their customers as quickly as possible. And that's one of the ways that they differentiate the services in the market space. And through some market developments, we found ourselves in a fairly lucky position that where the timing really worked out, that our technology, we had the right technology mix, we had the right services, we had the right approach as a business of experimenting and really trying to understand what customers need. And we managed to find this opportunity and really start scaling with that market quite rapidly at the end of the first year, beginning of second year. And we use that as really the foundational principles of some of our product development strategy in terms of focusing on APIs that became from design perspective are meant to be very simple in terms of usage, and really helping our clients to abstract some of the complexity that exists in the payment space by providing them with a technology that for a single endpoint allows them to interact with different payment mechanisms. So that proved quite powerful in that first market. And the theme for the second year then became scaling, growing, and then also finding new market verticals. So we are a B2B business, and as a consequence, what we tend to focus on is really finding an application for our services in a market deeply into how it's best applied deeply into a given market vertical. It's just talking to businesses about payments doesn't tend to land very well. It's a fairly abstract or concept, and the initial reaction you typically get is, but my bank does that for me, so what can you do for me that's different? So you really need to find applications that are most relevant in very, very different market verticals. And that was really the theme of the second year, where we started to explore new approaches, different types of propositions, and where our free product packages started to take shape in terms of helping businesses automate how they collect or move money into their enterprise, how they look to automate the activity out of their business. And then most importantly, and this is where we found a great opportunity for us to scale, is to work with partners to help them bring product propositions to market based on them actually serving their clients and providing them with payment tools. And one of our kind of anchor clients in that space has been Revolut, who have been working with us since 2017, and we've continued to work with them to enable them to scale primarily around UK payments. So that second year was very much focused on continuing to grow and expand that market footprint for us. And in the third year, we really started to get into our first scaling challenges, I guess. The third year is when we actually started to establish our presence in Edinburgh. We started growing that office with a team of only a few individuals, but very, very rapidly became a significant presence for us. With that came the typical cross-team coordination challenges and developing new ways of working. That necessitates you can't no longer go and tap someone on the shoulder that you've been working alongside for the last 2 years. The teams started to grow quite rapidly. So the beginning of the third year, we probably had a team of about 25 individuals. By end of that year, we were approaching probably 40 individuals. So you started to see a lot more growth in terms of the kind of communication channels you had to open and how people needed to collaborate. And with that also came a significant growth in the product portfolio that we were offering. So we've introduced a dozen new feature sets. We also need to focus on becoming a lot more valuable for our clients. We had to think a lot deeper in terms of the products that we offered, in terms of serving the different payment use cases our customers have, and really finding ways of, okay, we've managed to solve for a few flows that they operate with us. How else can we become more valuable? And that typically in payments means aggregating more payment mechanisms, growing the coverage that you offer to your customers, so that they can serve more of their needs through the interfaces that they build with you. Hence, we started launching new payments components. We started providing access to our travel, to our virtual card proposition, primarily focused on the travel market. And we also signed some very significant partnerships, which at that stage of our business were tremendous wins, but also quite challenging, as you have to respond to much bigger organizations and their demands. Hence, we had to grow even more. So by year 4, we probably started the year with about 60 individuals, but and year 4 for us was last year, 2019. And we had to continue to expand and grow quite rapidly again. So we started the year with probably about 4 or 5 delivery teams, and delivery teams in the context of Modulr are scrums. So we're very much operating in an agile way, where we have engineers and product owners grouped into teams. We started running that toward the beginning of 2019. It was probably about 5 teams. Roughly, the rough membership of the team was anywhere between 4 and 7 individuals. By end of the year, though, we were at 11 as we continued to grow and scale. So with that level of introducing new teams, new members, the level of coordination, prioritization really became another set of challenges. So we had to start to introduce more specialisms into the teams that we run and operate. So we started to differentiate between what we call in the business technical product managers and product managers. Technical product managers perform the more traditional duties of product owners, and our specialists in designing the technical components of our products, whilst our product managers focus more on the market needs and laying out the roadmaps for what we decided to call modules. Our platform became much more all-encompassing and included more payment mechanisms and components, and to the coordination activity of prioritization of what you do next, it became a lot more challenging. So we started to split it up into different modules and assign ownership to the product team to drive those forward. And it's very much fair to say it's an evolving journey, and we absolutely don't have it solved. There's still a lot of things that we need to coordinate, manage, and think through, and we don't always get it right. But it's a journey that's been very exciting, and we'll continue to focus on the team over the course of this year. So that's a little insight to our journey around product. Hopefully that was helpful and informative for everyone. Very happy to answer any questions that you may have. And I guess the other topic I wanted to share with you is, I guess, how we're adapting to the new circumstances with the pandemic and the restrictive measures placed on all of us. We really kind of approached it from two perspectives. One is we very early wanted to very much focus on making sure our teams are safe, but we also provide a lot of critical services to a number of our clients. The number of transactions we process through the platform has grown significantly over the years. To give you an example, beginning of 2017, when the business was in place for about a year, we're processing maybe 40,000 transactions a month. We have days where we process double that on a daily basis. So the growth has been significant, and we perform a number of critical services for our clients. So we need to ensure that we continue to do so. So we took a decision very early on, actually on the 13th of March, to move to remote working, and aided by our approach, which is very much focused on technology first. We were able to make that transition very quickly. So our teams have moved, and with a great pace, to continue to both operate and then also to continue to deliver and ship new features from middle of March through a remote environment. It's been a great experiment. We didn't have to do that before, and we were all very impressed with how quickly the teams got together and continued to operate, and with no impact on our services to our clients. We've been doing that for a number of weeks. Some great lessons learned from that process. And I'm sure some of the challenges you guys shared that are listening to me today, in terms of running your first all-company meeting, doing that over Zoom with 200 people was an interesting logistical challenge first time around, especially when you find out your licensing is limited to 100 users and you need to quickly go and unlock that limitation. But it's been a tremendous team effort to continue to operate the way we do. The second way we wanted to focus on responding to the circumstances is ensuring that we stay connected and informed. So we wanted to do something different because we cannot run face-to-face events with our customers and partners. So we actually launched a Modulr Club, which you can find out more details if you're interested, following that link that you've got on the screen at the moment. Where we do a weekly session with our partners and some of the participants in the industry to talk about how we're responding, how different people are responding to the circumstances, what we're seeing as new emergent trends, and to stimulate discussion and conversation. So we wanted to do that, and our marketing team's been doing a fantastic job of coordinating that. So that's really been the focus of what we've been doing and how we've been responding, but very happy to talk and respond to any questions you guys might have. So I'll pause here and hand over to Russell.
Fantastic, Kuba, thank you. Great, so we've got lots of questions for you. I'll just start off with one here, which perhaps builds out from what Praveen Vanderu is asking. He's asking if you've uncovered any new opportunities in the COVID situation that could figure in your value proposition in the future post-COVID.
Yeah, thank you. Very interesting question. So we certainly had to respond to a few things in the market. So this, as probably everyone's been seeing in their day-to-day business interactions, there's certainly been a slowdown in some of the core activities we've seen, and people rightly are focusing on the core things that they do and making sure that their business can continue to operate and adapting to new circumstances. So there's been a slowdown, but in some areas, but there's certainly been a lot of interest in terms of how you can, especially around the payments and the fintech space, how you can respond to provide services, especially for those individuals that are self-isolating and may need to continue to self-isolate for a prolonged period of time. So we've seen a lot of interest, and we're doing actually a lot of active thinking in that area to see how a business such as ourselves can support either businesses but most importantly government institutions that are interested in ensuring that individuals can continue to access either payment services or what those payment services enable. So for example, allowing a self-isolating individual to provide funds to a volunteer to do shopping on their behalf is probably one of the kind of very interesting areas that we're trying to see if we can help different organizations and institutions. So yeah, so definitely a lot of interesting things happening that we all need to adapt to.
Great. Sophie, I'll hand over to you for this.
Oh yeah, we've got a couple more questions in. So a question from Stephen Clark. I think in one of your slides, it was highlighted that Modulr is API driven or API first. We'd love to hear about how that's impacted your growth or what kind of opportunities have came from that kind of strategy.
Yeah, great question. So I guess the logic there is that we certainly saw that there's a gap in terms of how traditional payment institutions provide payment services. So we've seen the traditional way of doing that is you get very easily pigeonholed as a business in terms of the kind of things that you do. Based on the size you are, that will dictate the kind of services banks will provide you with. Which as an SME you'll typically get a kind of a consumer light product with maybe a few additional bells and whistles for a business. As a large corporate enterprise, because you're very important to the bank for various reasons, you'll get access to technology-based services for accessing payments, which are occasionally clunky. They're typically a little bit underinvested in. And if you're a middle business, rapidly scaling and evolving and depending on payments for the core of your operations, for example, you work in the travel industry or you operate as a lending business, or you even need to collect at volume the payments from your customers because you're a subscription business, you'll find it very difficult to access payment services that really work for you, especially if you're a tech-enabled business that wants to scale and operate and grow rapidly. And that's really what API First enabled us to tap into, which is those businesses that want to access payments, make it core of what they do, and then make sure that they can manage it themselves. So they don't need us necessarily to tell them how to best manage their payment activity. They just want to know that a payment's arrived. And they've got enough cleared funds to then do a specific payment operation. And that API approach allows us to be real-time, allows our customers to very quickly interact with us and build their own propositions on top of us at scale. And this is really what we've enabled partners such as Revolut to do. So that's the kind of opportunities that allowed us to tap into.
I've got one. You're completely on point in terms of digital. You're all about the digitalization of payments, and at a time when cash is actually a transmission, a vector for infection. So everything's been pushed in your favor in that sense. However, there's parts of society which are digitally excluded, digitally disenfranchised. How can you bring your services, to the disadvantaged and needing elements of society?
Yeah, great question and a very difficult one to answer honestly. I don't profess that we have it solved. I think the way we we operate, we do require our customers to have access to digital tools, whether they're consuming our services directly as a business, or whether they're a customer sitting utilizing one of our partners' propositions. So it's definitely a tough challenge. I think the way we think about the problem, what we want to do is to be that infrastructure layer, enabling people to solve that problem. So we want to take away the burden and the challenges of actually aggregating and managing multiple payment mechanisms for partners that want to go and help enable those propositions for end consumers. And that's really what we've built, and we have a number of partners we're looking to interact with that are thinking about that, and we're very keen to work and support those in those segments. And maybe to share one specific thought, I think one of the mechanisms that is certainly a very interesting way of helping to address the access to payment mechanisms is usage of virtual cards. So at the moment, for example, all cards are primarily, whether that's used at point of sale, are physical, and that limits its distribution, creates challenges in terms of getting access to it very, very quickly, whilst things like virtual cards can enable a more rapid access to one-time use cards with specific set values or specific set purposes that can help enable either customers or consumers or businesses to more rapidly transact in times of need. In terms of then getting that to those individuals, that's still a challenge, but that's probably one of the very interesting mechanisms that could be utilized to help solve for some of those problems.
Fantastic. Sophie?
I was going to say, will we squeeze in one more? Do you have a set of design values that inform product development at Modulr?
Oh, good question. So we do, but they're fairly loose. We probably think of them more as kind of technical design principles in terms of what we do. So we try to, especially in the context of the payments ecosystem, one principle we look to follow is making sure we create the right level. And I won't go through all of them, but I'll just talk about one that's top of my mind. We look to abstract enough of the challenges or detail or complexity around payment mechanisms and some of the formats and transformations that exist in payments in a way that makes most sense to our clients. The challenge that you're always faced with is you can't abstract too much because it needs to continue to make sense, but you need to find those patterns of abstraction that makes most sense for our customers without exposing them to 20 or 30 fields are different when you're submitting a payment to the faster payments network or to the European payment systems, but provide them with a consistent and cohesive mechanism to do that. So that's one of the kind of important mechanisms we look to focus on, especially when designing APIs. And we seem to be striking a good balance. I mean, there's always good feedback, whether that's constructive feedback, I should say, we receive on our API, but we seem to be getting a good balance based on some of the interactions we have with our partners, especially those that are engineering focused.